Hey, Glenn, we're going to talk about a legal topic today because you, among other things, are a personal injury attorney. When people get in automobile accidents, they're calling you to uh, help them recover their damages. And so we're going to talk about a specific topic to that, if that's okay with you.
Sure.
And Glenn, I think what we're going to talk about today is has to do with insurance, and that people they've got liability insurance, but they also have collision insurance on their car. So if their car gets damaged, the question is whether or not should they file a claim with their insurance company, or whether they should just pay for the damages out of their pocket. And you can give us some thoughts on that, please.
Sure. I can. With regard to not only collision but your homeowners, I think when you have insurance and you look at what your deductible is, I tell people look first at what your deductible is before you file a claim, and see what it is. Because if you go get an estimate and the estimate is anywhere close to your deductible, you probably ought to just pay it out of pocket because you're going to pay it out of pocket anyway. I saw a recent news story where a lady filed a claim against her insurance company. The damage turned out to be $1,008. Her deductible was $1,000. So she got a check from the insurance company for $8. But then she had a claim on her record.
Yeah.
And insurance companies look at the number of claims you have. And if you have too many claims, they may cancel you. And then if you go to apply for another insurance with a different company, they can pull up your claims history because these insurance companies share information. So once they share that information and you have additional claims, your premiums may be higher. So I always tell people, get an estimate, see what your deductible is, get an estimate to see what the cost of repair is before you file the claim.
So that if at the end of the day, if the amount that you're going to get from your insurance company doesn't add up to a whole lot, it's better to just not even file a claim. It's better to pay it out of pocket. Hey, Glenn, could you tell me about if you're in a car accident, are you waiting to notify your insurance company as to whether or not you want to file a claim for the damages to your car? Or can you file the claim and then say, okay, don't worry about it. I'll take care of it. Just forget I ever called you.
Well, if it's just a property damage claim, if it's simply a property damage claim, for instance, you're in a parking lot, you go into the store, you come out, and there's damage to your car, and you have no idea where it came from. Before you file the claim, get an estimate. If you are in a car accident and you may have injuries, you cannot wait
Okay.
because your insurance to pay your medical bills has a limited time period for you to file that claim and get emergent care before your medical insurance under your auto policy will kick in.
Excellent point, Glenn. Hey, Glenn, on that point, I want to say that I was listening to Clark Howard, the Consumer Warrior, and he was talking about how some auto insurance policies have a free towing service to you if you're stranded on the side of the road. But if you take care of that free towing service, they consider that to be a claim.
They do. And the other thing is keep in mind if you have AAA and you are paying for the towing coverage under your auto policy, you're paying two premiums for one coverage.
Right.
And AAA, you don't get a bill. With your insurance, you have to pay it and then submit it and get reimbursed.
Yeah. AAA is a better way to go. Glenn, the other thing
Yeah,
I'm
because they'll bring you gas and they'll take care of keeping you in your car in case you lock your keys in it or whatever.
Glenn, thanks for reminding me about that. I mean, it may be time for me to join up and do AAA again. It's been a while for me. Glenn, I have an investment property here in Orlando, and like a lot of people, I opened up my annual insurance bill and thing, got the sticker shock. Whereas, not that many years ago, it was $1,200 a year. Now it's going up to $4,500 a year. And so I started shopping it around. And the problem is that 5 years ago, I made a claim on that because my neighbor's giant oak tree fell on my property. Hey, nobody was at fault. It's just an act of God, but it just totally tore up this house that I own. And of course, I filed a claim for it. It's a substantial claim, and the damages were. But because I filed a claim 5 years ago, I couldn't get any other companies that were willing to write insurance for me.
They do that. They look at your claims history, and it depends on how many claims you've made and over what period of time you've made those claims. Like that poor lady that made the $1,008 claim. She got a check for $8, but now she has a reported claim on her history that is going to affect her ability to get the best insurance companies to write her coverage in the future.
And by the way, now when you're getting these bills, whether they're your auto insurance bill or your homeowner's bill, and you look at it and get the sticker shock like we all are, a way to bring down what your annual premium is to increase your deductible, what you would pay out of pocket. You're going to bring your premium down, and hey, if it's a small claim anyway, you're not going to file it with your insurance company anyway. You're just going to pay for it yourself, so might as well raise your deductibles.
That's correct. Just make sure you put some money aside to be able to cover those events. The other thing that's important to remember, Tom, is if you're not sure what your deductible is and you can't find your policy, don't call the insurance company to ask, because they may put that down as a potential claim. Call your agent and say, I can't find my policy. Can you remind me what my deductible is? Because that doesn't get reported to the insurance company. But when you call the 800 number and you ask those questions, that shows up on your record as well.
Great advice.
So call your agent, not the carrier.
Hey, Glenn, what are you telling people these days about whether they should have coverage, uninsured motorists or underinsured motorist coverage these days on their car? I know it's optional for us, but what are you recommending to clients?
Here in Florida, I recommend that you absolutely have to have it, because Florida does not require anyone in this state to carry bodily injury insurance. So if you're involved in an accident and you're injured, the person that caused the accident may not have insurance coverage to help pay your medical bills or lost wages. And if you don't have uninsured motorist coverage, you will have very little coverage to pay it, because your PIP insurance, which, by the way, when I started practicing law in 1982, was $10,000. In 2023, the coverage you can buy for PIP, which is your medical and portion of your lost wages, is still $10,000. But medical costs have skyrocketed since 1982.
Right.
And in Florida, what's happened, because insurance premiums have gone up so much, a lot of people are dropping coverages to be able to afford to keep the insurance, to keep their driver's license. So we have seen more and more people coming in where the person that was at fault did not have the insurance to help pay their medical bills and lost wages and for their injuries. And so if they don't have uninsured motorist coverage, we have to tell them there's not much we can do, because you can't get blood out of a turnip. And a lot of the people that cause these accidents don't have any collectability. And especially if it's late at night, I tell people if it's between 11 o'clock at night and 3 o'clock in the morning, your odds, especially on Friday or Saturday night, of being hit by somebody that's been out drinking and is not responsible are probably 1 in 2. So you've got to be careful and protect yourself and your family.
Exactly. Glenn, we know that here in the state of Florida, the law does require that you carry at least some minimum insurance on your car that you have. But at the same time, we know there are people that are driving around out there with no insurance. How is the state of Florida trying to stop those people? Are they trying to take their driver's licenses away if they fail to have insurance? How does the state of Florida know?
Well, if you drop your insurance, if you drop all your insurance company is required to report that information to the state of Florida. At that point, the state of Florida can suspend the driver's license of the person that no longer has insurance. And sometimes, even if you change insurance companies, you need to make sure that the state knows that you still have insurance, because we've actually had a couple of cases where somebody changed insurance companies and the state got notified that their policy got dropped, but didn't pick up because of computer issues or whatever, that they had purchased a different policy and their driver's license got suspended. So you've got to be careful about that as well. But yeah, in Florida, it gets reported, but the problem is, these people, the minimum insurance in Florida is $10,000 worth of property damage, which will fix a little bit of your car, and $10,000 worth of PIP, and that's all you're required to carry.
Yeah, that's not going to go very far at all. Hey, this is attorney Glen Wieland. Glenn, thanks so much for calling in the radio show and lending us your expertise. We appreciate it.